Dissector, you are an idiot. I just exploded.
Hey Ryan, why don't you pull up Amazon's margins real quick?
Well, yeah, I'd have more of a grin on my face than Stephen Hawking on Epstein's Island.
I'm off as a smug cock when you said that.
Wow, fiscal philosophy, you're not very smart at all. You screw up, cash flow kings. Dissector, you are an idiot.
Hello, everybody. It is Saturday. It is 7:30 p.m. Eastern, and right now, Fiscal is missing. We don't know where he is right now. There could be, typically at the beginning of these shows, we like to kind of make assumptions of what people could be doing at Saturday, 8 p.m. Eastern, in this case, Saturday, 7 p.m. Eastern. So we need to make some presumption of what Fiscal's doing right now. You know, it's Valentine's Day weekend. He could be having one of his lovers over right now. He could probably not be talking about grab stock. He could be doing quite a lot of things, but unfortunately, Fiscal will be here. We just don't know when. We figured we started up early because our special guest of the evening has to leave at 8:30, so we'll be going an extra 30 minutes. It will be a good hour 30 tonight of the Cash Flow Kings as per usual. Once again, if you guys are new to the channel, make sure to smash that like button, repost on Twitter. Helps out the show a ton, helps out engagement. Obviously, we only do it for the money here on the Cash Flow Kings. We don't do it for the love of the sport. That's right. He did pull a Seymour. We don't know where he is right now, so that's actually pretty creative. But yeah, once again, best way to support us on the Cash Flow Kings, smash the like button, subscribe, share it with your friends and family. That's the best way too. If you want to go a step up, though, we are right now, the Cash Flow Kings are a net cash flow negative company. So if you want to help out, support us, $2 a month channel memberships. For those who are channel members, you understand the value. We have really good retainment with you guys, which we greatly appreciate. Deep dives, which we're going to get back into, assuming Fiscal's alive right now. Merch discounts, if you're into that. I'm wearing the shirt right now. Access to join the show whenever your little heart desires. Exclusive episodes, unlimited impersonation requests. It's good fun. And we are also currently 8 members away from our goal of 20 by the end of 2025. So if you want to help support us, $2 a month. And of course, let's see who's in the chat. Is Alan here to make things weird? We always appreciate that. Seymour, I don't know much about Sabrina. Eric, welcome in, everybody. But with that said, Fiscal is still nowhere to be found. Maybe the Oracle got him, but we're going to let our guest in here. It is none other than Tom, the investing tiger, the savings captain. Am I missing anything?
Hey, good evening, guys. How you doing?
Life's good. Can't complain.
Glad to be here on a Saturday night.
I know. What, Tom, we me and Fiscal usually go over what else you could be doing at Saturday, 8 p.m. Eastern, other than talking stocks. Is there anything off the top of your head that possibly you could be doing?
Yeah. Thanks for bumping this up. I'm probably the oldest guy on X. Social media. I'm actually going out tonight at 10 o'clock.
Wow.
So I have to move this up. I'm a mover and shaker. I'm just not sitting around looking at stocks 24/7, although it seems like it. But yeah.
I appreciate it. No, it was very easy. Hopefully our co-host he thought it was 8 p.m. and hopefully he's alive right now. But yeah, very excited to have you on. For those who are new to the show, by the way, I think I might add, I think you are the oldest Cash Flow Kings guest so far.
Let's go, Jen.
But yeah.
Gen X, not a boomer. Gen X.
Yeah, we appreciate the clarification. But for those who may not be familiar with your page or your podcast, obviously, what kind of investing do you cover? As the kids say, what is your game?
Yeah. So, okay, what we do. So once a week, we come out with an episode on my podcast, The Money Happy Hour. You can find it, wherever you get your podcast.
Link in description.
Yep. So my game is, hey, we just talk about investing. A lot of times it's a conversation like you're at a happy hour. A lot of times it's just me covering kind of like unconventional, like the things that the talking heads don't talk about that I think they're getting wrong, that most people screw up. So we might talk about, like, people buy SCHD. I'll give you a teaser. And then I see this all the time. A 28-year-old kid buys SCHD, and then they get disappointed that, they sold Avco. Why did they get rid of Broadcom? Well, know what you're buying. every year, and this is what the reconstituting get. Just don't go into it in the front end. So I try to help people save things. And on X, that's where I mostly hang out under the investing tiger and savings captain. You never know what you're going to get out of me. It's going to be stocks. It's going to be mayhem. I'm just covering no engagement bait, just kind of interesting stuff that most people don't talk about. Like today we talked about what's a wide moat company. I see that name thrown around, that term thrown around, like wide moat. It just gets broad stroke to a lot of different stocks. And like, it's no, just because the stock's doing well, doesn't have a competitor right now, doesn't mean it's going to be a perma wide moat. That's not like what Morningstar means. So that's what I kind of do. Right?
Yeah, that's great. Well, the topic of today's video and the title is traditional dividend investing dead? And I know you just mentioned SHD. Are you an SHD holder right now?
I am.
I am too. Okay, that makes two of us.
Or
now, for clarification for everybody in the chat, I understand that I'm 19 years old and that SHD is probably not the most optimal thing. I have weighting 25% SHG, that's the goal, and 10% SHD. So SHD, the dividends will be used in like 10 years, vacations, other activities, and let the thing compound. Yeah, I love SHD. I think it's overhated, honestly.
Yeah, I think you're thinking about it right. I have two core holdings. I have VTI and SCHD. That's
beautiful.
About 80% of my portfolio, then about 12 individual stocks. And I own everything from the stodgiest boomer type stocks. And yes, I own Tesla and I own Bitcoin, so but my overall portfolio beta is below 1 too. So I managed that. That's a little technical thing we kind of teach on. We kind of teach on Money Happy Hour, the importance of what your beta is.
Yeah. Definitely. I think once I started going more towards like an ETF or index fund based approach, it just kind of naturally made everything a little more easier when it came to investing. If comparing just investments in the portfolio and individual stocks that I may have already held in the first place, like example, McDonald's. Like, I love McDonald's. It's a great company, but like, am I going to get a better return on the index or McDonald's? And you just got to be realistic with yourself. So definitely when you start comparing things in your portfolio to, is this going to outperform the index? Is it worth it? It definitely, I think, improves your investing thesis and mindset.
Absolutely. So what's your goal with SCHD? I know you said dividends.
Yeah.
Out for vacations. Like what?
So as I mentioned, 19 right now. So I gotta be real with myself. I want to live a comfortable lifestyle in the second part of my 20s. And right now, a lot of my portfolio is going towards SHG. Obviously, it's a big part of it, but also mainly growth stocks like you got Uber, some tech stocks, small caps, medium caps. I'm definitely getting into more of that. With SHD, my goal eventually is to kind of have it grow with the portfolio, be at like 10% allocation. Right now, it's even less, and it's probably going to be less as our co-host joins us a little bit late. The Oracle did not get you, Fiscal, did he?
No, I was just late to hear about the early start. That's all.
Okay, that's good. He pulled a Seymour, as Seymour said earlier. We were covering my SHG thing.
Oh, okay.
Yeah, so obviously Fiscal's not a huge fan of SHD, but no, I've held it since 2021, 2022, and I think also like we have not had a bear market in a good while. We're like in like 3 years. I even remember in like September when we had like that one horrible day. Like SHD was kind of the only thing holding out my portfolio. So definitely it's going to be a nice little hedge against Jurassic down day or market cycle that's inevitably going to come. So, but yeah, definitely I think the dividend growth and the distribution payout over time, that's really attractive. And I want to use the dividends for just to make my life more comfortable. I don't know what specifically yet. The Vegas meetup has definitely been a topic of conversation, but yeah.
All right. That's good as long as people know what they're buying. I see a lot of people getting mostly in their 20s, they buy it and they're like, and they end up having to sell it because it's like they didn't go into it with understanding what the intent was of SCHD in their portfolio. And then I always say, like, I advise clients for 30 years. Then it's up to you. Like, what do you feel comfortable with? But at least go into it knowing what you have.
Mm.
But
Yeah, and the more weighting in SHG too is going to offset that potential like opportunity cost loss with SHD with just buying SHG or the index, if that makes sense. Matt comes in with a very good point here. I've made more with Uber in like a week than I have 3 years SHD. That is true. But I would, while that is true, Matt, I think it's also important to bring up the point that I made more on Uber in 2 days than I have on Target in like 4 years. So that's just every day.
Sounds like you need to sell a lot of things then.
There's only like 3 more things that I got to really sell. It's Target. I'll pull up the portfolio right now, actually, on Finchat, which is an affiliate of the channel. Target is one that I'm going to sell. It's just, I think I can get a better price for it, like $140. Target is going to be sold. Union Pacific will be sold, and Starbucks is probably going to be going to, assuming that it doesn't go back to 70, which I think can happen.
There's no way Starbucks could ever. There's no way.
Yeah, famous last words. Tom, do you have any thoughts on Starbucks, Target, any of the tickers that I just named?
pretty much all of them. Yeah. Starbucks, I've owned it for 13 years. So I don't know about the price. I just sit back and collect the dividends. And I'm finally confident. I've done 3 podcasts on Starbucks. One a few weeks ago. I'm more confident now in Starbucks than I have been in a year.
Oh,
New guy. I like him. But you have to listen to the full podcast to get my point with it. Leadership matters. Leadership makes a difference. This is the first time, I'll leave it this way, the first time I've been confident owning Starbucks with a guy not named Howard Schultz as the CEO. They do it. If you think about it, Starbucks for 10 or so years, Schultz retires, the company struggles, he comes back, bails them out. This will be the first time I think they're going to dig out of it. But right now, on a technical basis, 109, 110, 112, it's, I think, fully baked in. I had a target of about 115 to 120 on it for the year. So we may have seen the better part of the truer valued gains. Now the next couple quarters Starbucks has got to do it.
Nah, yeah, I think like my thing with Starbucks is I think Brian Niccol, it's going to turn out well. He's had very good results with Chipotle. I think he's leading the company, he's addressing the issues that need to be definitely addressed, building a more, I guess, an actual experience, not just paying $5 for coffee and leaving like in a minute, making the stores nicer inside. It's just like, I think they're going to get the results, but they haven't shown yet. And it's being priced in as if they're shown. So I've been selling Starbucks. I've been trimming it. I was buying really heavy in the 70s. Like I was the Starbucks cult leader. I resigned. But I was buying very heavy in the 70s, as Fiscal can attest to. And I've been just trimming recently. It's still like a 6 or 7% holding for me, but I've just been indexing that money pretty much or putting it in high tide.
You asked me about a couple others. Can I tell you about a funny Starbucks story?
Yeah.
Happened today. It has nothing to do with the stock, but I was there as a customer. So I was there, they're trying to simplify everything. So, I was looking, it looks a little simpler. I did see a person getting a triple shot of this, double pump of this, kind of tying up everything. But the funny story is there were these 2 girls in front of me and they were talking to one another. I couldn't help but overhear them. I was waiting for just basically black coffee, having to wait for these other drinks in front of me. But they're saying, hey, I think I'm going to get a tattoo. And I could just hear them talking. Yeah. Well, what do you think? I'm thinking of getting a tattoo of an ant. I'm looking, this is pretty interesting. And then she says, oh, yeah, why are you doing that? Well, I'm going to get an ant, but I'm going to get a tattoo of an ant the size of an ant. Like, what in the world? Then I'm really listening. Her rationale was, well, because this way when people see it on me, they're going to say, oh, you have an ant on you. Oh, no, it's really a tattoo. I thought that was the craziest thing. That was my Starbucks story. That's the best I can do on a Saturday night.
This is why I love Gen Z girls, man.
Yeah, where everything's pierced, a few different colors hair, and and they're like just amazed with each other's brilliance. Target, not a big fan. Haven't.
It's been rough.
5 years. I've lived through. People call me an extremist. Prove it to me, Target. I rub people wrong about this. I always leave it this way. I see the Kmart effect. I'm old enough to remember, oh, Kmart's a great company, and then it just withered and withered away. Maybe,
Hey, I may not look old enough, but I remember going in Kmart as a kid.
yep. So, I mean, and your kids will never have that memory. It might be a little extreme with Target, but I think about it this way: when you put them up against Walmart, what Amazon can do, and Costco, the three best retailers who have pretty much all more than doubled over the last several years, and Target has halved just on the stock price. Revenue is pretty much flat over these. Like, what's the differentiator? And the funny thing is, the odd thing is, I'm surprised. Who is their CEO?
Brian Cornell.
Boy, he's got a long leash. I'll tell you what. I'm surprised.
Yeah.
Shareholders have really called for his name. So I'm not a big fan of Target. I think it is. It's the classic. If great way to miss a bull market, in my opinion.
I agree.
Yeah, thankfully, I trimmed a little more when I was at 140, but it's been a rough ride to say.
I've been whispering in Ryan's ear, dump Target, buy more Uber.
Yeah,
you never said that. I don't think you said that. No, I would totally sell it, but it would have something else would have to fall enough to where it makes sense. Like if Uber went back to 65, easy. High Tide goes to $2, easy. There's just nothing like that attractive on sale right now, if that makes sense. And I have enough cash where it's like I could already buy a dip. But yeah, looking at the revenue, it's been 4% growth rate over the last 10 years. That's not the greatest. It's time to admit my loss with Target. I don't know what I probably, I think as we were talking about earlier, Fiscal, you weren't here, but comparing just individual holdings, just buying the index, it just doesn't make sense to own Target. When you could buy the index.
It's crazy. Literally, yeah, Target for sure. You're kind of your opportunity cost in something like Target's pretty abysmal.
But Uber's up.
Yeah,
that's all that matters.
That's the thing. I've been there before myself. Walgreens was a thing for a while for me, right? So we all make these mistakes, but the important thing is to let it go and put it into something that's going to work for you.
I will. I did an episode on this too. I never sell a stock, but I did. It was some insane streak, 2,700, 3,000 days, like 7.5 years without selling a stock. And I sold a stock summer. Then my 2 ETFs and my 12 stocks, I just buy them. That's all I did. But I sold Uber, 74, 76, I think, at a double. I held it for a while. Bought a lot in the 20s and 30s, had an average like 32. And you know what? The reason I sold it was it didn't meet my original thesis because, and I think Uber's could do really well. And I talked about it in my podcast, and with Bill Ackman taking a major mistake announcing that this week. That's probably the case. I'd rather be wrong than taking a double than wrong. Like, why did I do this? But it didn't meet my original thesis. When I first bought it, they were the disruptor, right? With ride sharing and everything like that. They were disrupting. It's kind of interesting now, the environment they operate in, it is being disrupted, and they're having to react, in my opinion, and respond to it. That's a different skill set. They can nail it based on their scale and do it phenomenal. But I said I had a double. Let me just take the money off the table. I built up a little bit of cash, and you don't really say you don't go broke taking a profit.
Yeah,
that's true. You never go broke doubling your money. That's for sure.
Yeah, me and Fisk are both recent entries into Uber. We're new Uber shareholders on the Cash Flow Kings.
But what you experienced here, I held it down flat, averaging down in it probably 2.5, 3 years. And then, like you said, most of the returns, like it all happened at once.
Yeah, it's wild. Like as I mentioned, like it's a love-hate relationship. It's kind of depressing seeing your Uber stock get more gains in like a day or two than you haven't seen in Target. And like, not that I haven't seen any gains in Target, just to put that out there. Yeah, it's definitely a bit eye-opening. And once again, thank you to Arya for coming on to the show and giving us the Uber intervention episode.
Yeah, well, hey, I feel good at 61.44 as a cost basis for what I think they can do cash flow wise and everything else,
Yeah.
It's a place to be.
Matt, I'll make you a deal, Matt. If you become a channel member, I'll sell an undisclosed amount of Target on Monday. If you become a channel member, I'll do it, Matt, but only for you. That's how bad. That's just how demoralized. $2 is going to dictate a $300 loss. I don't think it's I don't think it's 300. It's like 120. But
and I'll tell you a funny Target story, if you guys, real quick one. So on Monday, on the Money Happy Hour, we're unveiling, I call it the dogs of the Money Happy Hour. We have picked, the 11 stocks. It's a fake portfolio, beaten up stocks like Target. And we've just picked 11 of them, put a pretend $1,000 in. We're going to track it and see how it does the whole year. But we're going to track it against the S&P 500. And Target, it was funny, Target did not make it because my thought was I at least want these 11 companies to have a chance. That's how negative my sentiment is on Target. I'll say it again. I think it maybe has to trade up to about 132 in that channel, but I don't know what the catalyst is going to be on it. But that's, I wish you best of luck, and anyone that's listening, best of luck with Target. I hope I'm wrong, but I didn't even have confidence to put Target in a portfolio intended to find beaten up stocks. And I'm telling you guys, we got some stinkers in there. We've got some tickers that only those tickers are so ugly, only a mama could love them. They're just
Can you reveal any of them?
Monday morning, 4 a.m. Eastern time. The full takes place.
That's a way to market a show. What are some of the other traditional dividend stocks you kind of own?
So I would, on X, I talk a bit about dividend stocks. I make a lot in dividends. Most of my stocks pay a dividend. But the weird thing is I don't consider myself a dividend investor. Like guys out there that maximizing yield, tracking it down to the penny. I don't get to, I get a little giddy when Realty Income pays me a nice dividend yesterday. And, you're whole sharing dozens of shares every month. That's nice. That's good. That's just I talk about that's plays a position in my portfolio. I get just as excited buying Kava, taking a position at $29, $32 and finding a great growth stock story to supplement it. So the average yield on my portfolio is about 2%. It's pretty low, 2.1%.
Yeah, that's pretty healthy, honestly. Like I think, that 1 to 3% range. I think anything above that, you're maybe sacrificing, unless you're all in like BTI or something, which you got to respect it.
Yeah, that's a great point, Brian. Because if I back like Realty Income out of it, and I back Duke Energy, and then I think the best dividend aristocrat stock no one ever talks about is Old Republic International, symbol ORI. If I back those three stocks out of my portfolio, I'm about 1.1, maybe 1.2% in yield.
I was looking at ORI really early days. Like do they still do the $1 a year special dividend?
They do. So I've owned it, I guess, 7 years now, and I've got 5 special dividends. This last one, Fiscal was $2. Decent.
Oh, so it's not all. I thought for some reason that it was like always $1 for some reason.
It's $1 to about $1.50 has been my experience. I think we were shut out last year, so it was like they gave us a double bonus this year, I suppose.
Topic of dividends as well. For those who are in Evolution Gaming, they pay out an annual dividend, which I just learned this week, which is in May.
That's
so
normal.
Expect a big payout.
That's really normal for
Yeah.
European and international stocks. They either will do semi-annual or annual.
So we
because
call
they're
a cultured company, everybody.
well, it's because they're more focused on the overall year than on the quarter by quarter. Like the focus on every single quarter is a very almost uniquely American thing.
Yeah. Thank you again to Seymour Duck, who has been very generous with gifting Cashflow Kings channel memberships.
Must be doing well at the blackjack tables.
Yeah, must be doing well. He lost all of his money on the members only. So Alan got one that. So shout out Alan. Maybe I'll sell Target. They're undisclosed amount. Probably will now. Yeah, no. I think like to kind of come back to the title of the video, like traditional dividend invest, I feel like it's overhated more than it's overrated. Like I think it's definitely serves its purpose. I just think if you're, oh man, we have another channel member. Everybody's just trying to. We're being overwhelmed. We'll do our dance once Tom leaves. Everybody, we'll do our fun dance. We're gonna. You don't get to experience this, Tom. I'm sorry.
Well, I'll have to do the rewatch then to get.
Yeah, you'll have to do a rewatch.
That's good. Mark.
Yeah, thank you once again, Cabo and Seymour Duck. But yeah, back to the dividend investing thing. Fiscal, do you think it's more overrated or overhated?
To be honest with you, it depends. Like, I think on Twitter, it's overrated.
Yeah.
Like, it seems like almost everybody in the FinTwit sphere, like 50% of them or so, seem to have Dividend in their name. Versus on YouTube, a lot of the most popular, like there is definitely the Dividend niche, but the most popular financial YouTube channels don't really have a whole lot to do with dividends. So I think on YouTube, maybe overhated or underrated, and on Twitter, maybe overrated and underhated.
Tom, do you think it's overrated or overhated?
I think it's misused and misunderstood.
Yeah.
I'm not a dividend guy. I'm a shareholder yield guy. I'd like to see a healthy dividend, growing dividend, and shareholder yield. Give me those companies. Give me like a Costco any day of the week. Companies like that. Visa. I mean, those are some great names. It's just misunderstood. I don't. I mean, I'm 56 years old. It's good to have dividend stocks in my portfolio from a stability standpoint, and it's going to replace my income and be there for me. But I hate to see guys, in their 20s, like sacrificing growth in their portfolio. And I think we're heading into probably this may be one of the greatest times to be investing. I'm not saying it's going to be easy. We're going to have another 25% year this year with the amount of technological evolution. I don't know if I want to own, if I'm in my 20s, why I want to be that anchored down in true dividend stocks. That's just my opinion.
Yeah, 100%.
I agree. Why own Target when Amazon is basically taking over the entire U.S. economy? So
you're implying that I should sell my Target and average up on Amazon?
I mean, Amazon's not terrible here.
It actually isn't. I wanted to talk about the Amazon valuation sometime tonight because we have a night. We were probably spoiled with that entry that we got, like 160, 170, 180.
Yeah, my total cost average is 179.
Oh.
So yeah,
I love Amazon. So you mentioned you like Costco. Do you like the business model of Costco, the DCF part of it?
Yeah.
You like that? Boy, do we have a pitch for you then.
No. I like the business model of it, and I tried buying Costco for 5 years and was always from a waiting standpoint, wait till it gets down to where I wanted to buy it. I finally gave in on this last run. I was holding out for 130. I think I bought it at 150, and since then. It's never been cheap, and it's a crazy buyback method. I'm having to adjust it. I buy it whenever it pulls back 5% from its all-time high. It's worked every time. Everything. It works until it doesn't work anymore. So
Very true.
I thought
Wow.
but it is. I mean, it's overvalued. It's not cheap. What are we
Yeah.
over? We've got to be over 54 times earnings now. I should look.
Well, Tom, do I have the stock for you if you like the business model of Costco? And it is none other than our favorite segment of the show, the High Tide pitch to the new guest on the show. No. So have you heard of High Tide by any chance?
I have. I don't know much about it.
Okay.
What's
Fiscal, are you ready?
Is it HITA?
Roll it up.
Roll it up. All right. No pun intended. So we recently last week had the High Tide Roundtable. We brought 5 investors, including ourselves, on. All are pretty deep into the stock, and we just talked. So if you're interested in actually like getting deep into it, I'd highly recommend that. Shameless self promotion there. But essentially, they're a cannabis retailer. Now I know the word cannabis can be very scary at times with the whole bubble and a lot of the poor business models in cannabis, but it's important to keep in mind. This one is just a retailer. They don't grow the plant, and it's a very effective business model. Fiscal, what are some of the other points when it comes to High Tide while I pull up the financials on Finchat?
Okay, sure. Well, one is it's a small cap. It's around 250 to 300 million US.
Yep.
It's a Canadian based business, so the federal legality in the US doesn't matter to them at this point in time. They're now international, as they started wholesaling in Germany very recently, as in it hasn't even reflected on the financials yet. And the valuation is a mere 12 or 13 times free cash flow.
11 times free cash flow.
Oh yeah, we did have a pullback here recently.
Even better.
So there's a lot of positives going for it, and a lot of their competition is going bankrupt. It's a very difficult industry to succeed in, yet they are succeeding. Blake likes to call them the apex predator in a very angry and dangerous jungle. Canada.
Well said.
So they operate in Canada, and you said part in places in Europe?
So they Canada, yes, and they have a recent acquisition that gives them a sort of a tentacle into Germany,
which is 2 times the GDP of Canada. And
more than 2.2 trillion compared to 4.9 trillion in terms of GDP. And the appetite in Germany is similar, if not higher, actually. So that could be a tremendous opportunity, and it is definitely.
Did you mention the club model that they share with Costco?
So yeah, that's the reason why Costco was a segue into the High Tide conversation, because they have a discount club model with 2 tiers, a free tier which they use to collect customer data, which they also monetize with other companies in the industry. And they have a paid tier that is growing at an enormous rate. It's called Elite. They pay an annual membership for it, and they just opened that to international customers. Now, for the international, they don't sell them any kind of cannabis, just accessories, glassware, and the like. However, like on launch, they got 3,000 members in that, which for their size is actually pretty impressive. So it looks like a very substantial opportunity. Early days, cheap valuation,
Free
low
cash flow
market
positive.
very cash flow positive, and they're growing using free cash flow. So basically organic growth versus taking on huge amounts of debt or substantial share dilution.
Yeah, I noticed that looking at their. Let me ask you: do they sell a $1.50 hot dog? No.
They do a $1.50 cannabis bong. No, I don't know. I don't know.
No, I'm looking at looks. I mean, and what do you think? Is there a certain catalyst when I think of a small cap stock, like a catalyst that's going to basically take it away? There's companies like Hims gone through. I'm in one right now where I could see a clear catalyst, and the thing just
So,
tripled
I
up.
mean,
Is it just a slow and steady grower? Is that what you're hoping?
so it could be a slow and steady. Well, not even really slow. Like their growth is healthy, I'll say.
Yeah.
But there are probably multiple catalysts that could give it a surge. For example, anytime there's like actual serious talk of descheduling or anything like that in the US, it seems to hit the whole industry, just because that may
Volatility. Small
shorten
cap.
shorten the time horizon with which they might be able to enter the US, though their CEO has said he would not go into the US, one, prior to legalization, and two, if it wasn't accretive to shareholder value. So they're not looking to just get into the US just to get into the US. But since the US is sort of Ahab's whale in this industry, it's the Moby Dick. If it opens up in anticipation of that, the whole sector would probably blow up a little bit price wise. However, if it doesn't, and they just continue to open stores, grow their free cash flow, etc., and the valuation doesn't go anywhere at a certain point, if it's trading for like 3 times free cash flow, they can just do a huge buyback or something, right?
Yeah.
So it can pay you off either way. It's just a matter of patience.
And it looks like it's pretty thinly traded. You know how many shares are outstanding or in the float?
We can pull that up on finchat.io. 80.9 million.
In the
Link in
float?
the description, guys.
Yeah, link in description.
85 million shares. Yeah.
Okay.
Very small cap, but like one thing I will advise, if anybody in the Tom or anybody in the chat is wanting to get into the company or any small cap in general, be ready to eat volatility, just because markets can be very irrational.
Yep.
And very oftentimes, as you're seeing even now, the stock has still been decent recently when it comes to returns, but like it's not following the cash flows and the fundamental growth of the business. So I think if you can focus more on the fundamental growth of the business, focus on the positives, cash flows are growing, take that away from the stock price, pay attention to it, buy the dips, and you could be looking at a solid return, not financial advice.
Scared me there with 85 million outstanding because I was looking at the volume and it was 4,000 shares, but that was in the aftermarket on Friday.
Ooh,
right?
Yeah.
So trade's a good 500,000 or so, a couple 100,000 at least every day. So it's turning its float over. I like to see that in a small cap because sometimes I always have to think the liquidity, getting used. If it's not liquid, you're the liquidity when you're buying a small cap.
Yeah, there is a small but very dedicated community of retail shareholders. They call themselves barnacles because they hang on tight and they consistently buy routinely. I know I've heard people saying they buy like every paycheck, they buy a little bit of high tide. Some people, they have a monthly buy order. They just a lot of guys just DCAing into this thing over time.
Right.
Revenue with a 3-year growth rate of 42.3%, 5-year growth rate of 75.6%. Last week, we kind of came up with the assumptions for revenue growth around the 20 to 30% range unanimously.
And it looks like it's retraced just on the technicals to a little bit of minor support there in the 260s. Maybe it forms a beautiful cup and handle on the other side. Maybe.
Could happen. I've seen crazier things.
Meta.
I just came out of a short-term small cap trade that took off. I got out of it. It took off, got out of it, did exactly what I wanted it to do in a very short time. And I'm actually buying it back because I'm so interested in the business that I'll hold a few thousand shares of it, maybe 3,000 shares of it, and just let it ride for a couple of years. I got so many tailwinds to it. I think it's going to be a real company. I think it'll be the type of company, the people that post on X, like that are always posting hymns
Yep.
SoFi,
Celsius.
Celsius, that was one. Thank you.
Yeah.
This will be, a year from now, this is what they'll be talking about.
Interesting.
So that's kind of why I'm buying it back. It's like, you know what? I locked my money in, took it, ran home, and said, I'll take some of those profits and let me buy it back just a little bit lower and own it, because I think it's the next couple of years could be really, really interesting. No one's ever the next, but it could be the next Palantir.
Dividend dude wants to know about it. That's the case. On the topic of hymns, though, hymns had a ridiculous week, and shout out MV Cunna, because last week he came on the show, and when you come on the show, your stock goes like this right after the show. Hymns had a ridiculous week. I didn't really pay attention to why it went up. I'd have to assume like decent earnings. Fiscal, did you pay attention to the hymns?
No. The only thing with hymns is
a little overpriced.
Well, obviously people have been talking about it for a while. The telehealth thing, of course, yeah, that's the next big thing. Though, also with Amazon getting into it, I think I'm like, it's okay. If I'm in Amazon, I'm kind of already in the telehealth, but maybe there was room for two, and I should have been more open-minded. I don't know.
So Fiscal, whose free cash flow does this look like? If you had to take a guess and you didn't see hymns at the top, whose does it look like?
I mean, Palantir's did look like that for when, like, not too long ago, like a year and a half, 2 years ago, that was what their chart looked like for free cash flow.
Well, eerily looks like this, though.
I don't know. You tell me.
I know a certain company that we just discussed.
Oh, is it high tide?
I actually think we should be able to free cash flow. If we can, let's see.
Oh, by the way, it could have been grabs as well. Like,
it could. Yeah. All the free cash flow for these kind of companies looks very similar. Okay, so we'll do high tide, and we will do hymns. We were comparing Amazon and Google earlier, so we will take that down. Yeah, looks obviously a little different, but two consecutive years of positive free cash flow. Hymns is on a larger scale, but high tide's getting up there. 76% growth rate. So,
would you guys jump into either hymns or Palantir at these levels?
No, I had Palantir at $6, and I took a 4x on it.
SHG has enough Palantir for me.
Yeah, for sure. Like, yeah, if I only look at the price, it seems like Oops should have held Palantir for a lot longer. But at the same time, it's at a certain point, I was like, I don't know why it's trading for this much, and I don't know how it justifies this value. So,
Dividend dude tweeting about it. I think that has to be like half the valuation. Like this is ridiculous tweets. It has to be like, I don't know, some insider was seeing it and he was buying up shares as every tweet that came out.
So that's pumping it up. I'm friends and friends with a lot of people. I interact with them a lot. And I know. Yeah, I always tease them about that too.
Yeah, we love Dividend Dude on the channel. Dividend Dude was in the chat earlier, so shout out Double D's first ever Cash Flow Kings channel member and guest. So hope Double D's is doing well at college right now. He could be doing some of those things at 8 p.m. Eastern that you don't want to be doing.
Wow, I'm getting I'm seeing some interesting things in the chat.
Yeah, it's always an interesting time Saturday 8 p.m. Eastern on the chat. With Retire on Dividends. Tom, do you have any thoughts on Yield Max? We only have you here for about 10 more minutes. Any thoughts on Yield Max? Because that's always a fun question to bring up.
Okay.
My answer generally is no. I mean,
thank you.
The next thing, it's been on my list for a while. I'm going to do a complete expose on it. I'm actually going to have a person on one of these synthetic covered calls on. I'll approach it with an open mind if a person gives me an open mind. But, I've been around for a bit. Any of these synthetic products, I can't think of one that is, that's great. It feels like it's the GLP-1 of dividend investing. I don't know. You just want to get a dividend, earn a dividend. You want to lose, go exercise or eat less. I think that generally is what I prescribe for most people.
Yeah, when it comes to yield max, like the biggest argument that we have, more specifically fiscal, because I think you're the one that pioneered this great thought, was just like, if you want to, do the options, learn to do it yourself, and you don't have to pay that commission or whatever you have to pay, and it's unfortunate. A lot of people like that are just very vulnerable to the free money thing.
Yeah, because yes, you are paying about 1% to them to do it for you, and if you adequately understand what they're doing, you should be able, like, if you understand it well enough to be putting money into it, you should be able to actually do it yourself and save yourself the 1%. But they think, oh, the 1%, but they're getting me 100% yield. So what's the 1%? But that's not their total return. And 1% deducted from your total returns compounded every year is actually a huge amount. But it's clear that they don't understand total return very well, at least most of the people getting into it. And that's a problem.
Yeah, the 1% expense ratios on average kind of does me in too. I'd rather just write covered calls.
Yeah. And that's where I'm at. Like if I'm floating a lot of cash, might do some cash secured puts on some stuff to maybe try to, inch my way in. Or if I've got some stuff that's overinflated in price, maybe write a little covered call here and there. And that's enough, really, I think.
I mean, I approach most things. If it's not right for me, I don't believe that necessarily makes it wrong. And if I don't use it or understand it, that doesn't make it wrong on its own. But in this case, I just don't see the. Yeah.
I think the problem, though, with with like putting your money into yield max, but not even being able to describe what a call option is, means that the risk, because you should understand probably at least the risks of what you're putting your money into. At the very bare minimum, that should be something that is on your mind. Wow, I'm putting my money in this thing. On the surface, it says it's got a 70% yield or something. Since there's no free lunch, the natural question is, okay, what's the downside here? Worst case scenario. And if you can't figure out what that is, probably consider something simpler or more straightforward.
Yeah. I'd rather put my money in something like that than go with the growth side and go with my, can I bring a stock to the table?
Yeah,
always.
Okay. So I came across this one. I'm always looking. I'm not a trader, but I know what I'm looking for. And when I see something that meets all my criteria on the front end, I go in and I go heavy. So when it checks all the boxes and it's a small cap stock, I'll do it because it's checked all my boxes. I feel good about it. The only thing that can go wrong is it goes wrong. But I've done my pre-flight check, so to speak. The float, how it trades, what the catalyst is going to be, how do the technicals look. It's a long list like that. But Big Bear, BBAI, I went into that. It must have been right around Christmas, 3 and change, punched out at 9 and change. Not that long ago. I tell you what, when I go in heavy on that, I mean, I went in like 25,000 shares initially. 25.5. Took the profit, took it all out a little over a week ago, I guess. I ride it into the weekend at 922, 924. So I hate to say I got seller's remorse, but when I started looking at this and some of the stuff that's going on with it, the contracts they've secured with the Department of Defense, coziness with the current administration, things like that, started seeing, real money come to the table. BlackRock, one of my favorite asset managers, T. Rowe, a few things like that. The damn thing trades. It turns its float over daily. It's averaging over 100 million shares traded a day. They do have a partnership with PLTR. They're make or break it on their own. But there's so many potential. This exhibits the chance from here. So I've bought it back. I bought 1,000 shares back at 786. I want to say, and then, oh yeah, the day we were scared about inflation, right? CPI. We had an inflation scare for 20 minutes that morning.
Oh yeah.
Bought $1,000. I'll add 3,000. Just tuck it away and forget about it, and see what happens. I took all my original profit off the table, invested some of it in SAHD, some of it in Realty Income Corp, and now I'll just take this and see what it does. But the thing that's hard to say, these contracts are so-called, I forget what they call, DIDQ, which basically means it could be for an unlimited amount. I don't know what that is. So the next earnings report's in early, maybe the CEO, maybe they read out and give some sort of guidance, true indication. They're losing money. It's not, they're not going to have an earnings story like PLTR did this quarter. They're not expected to, but I think it's going to be the story what the next couple of quarters look like as they start putting this together. So very optimistic on it. Worth a chance. Worth a lark. And if it goes to 6, I'll buy a little bit more. I just pop a couple hundred shares a time as it trades and sells off. But I feel comfortable with that name.
Yeah. What is your highest conviction holding? And you can't say the index, obviously.
It's a loaded question because I post about this a little bit. Because I kind of fundamentally say, if all of the stocks that you own aren't your highest conviction, then you got a problem.
Yeah.
That's the stock you need to sell. So I only own 12 stocks. That's why I got high conviction in all of them. They're like a team. They all play. Yeah. I'm high conviction in Realty Income Corp for what it does for my real estate dividend piece.
Yeah.
But it's not the same level. It's not the same type of conviction I have in Kava or Costco or what I've owned for 20 something years. You play a different position.
You ever look into VG Properties?
I have. Yeah.
Any thoughts?
I think that's a great REIT. I've got so much of the Realty Income Corp, and I have agree. And the interesting thing about, and most people don't know this about Realty Income Corp, they've actually lowered. I mean, it's like trying to turn a cruise ship around or something. But they've lowered their exposure to retail. They've actually gotten into casino a little bit, data center, like that. So their portfolio is broadening out a little bit more. The only thing I didn't like about Vici was it was a little too much exposure to me in one area. I don't know. Yeah. The worst can go wrong, but I think Vici's a great property.
They got out of Vegas too. They still have pretty high exposure there, but like I remember at one point, like when I first started buying, like it was like 80 or 90% all in Vegas, and they've kind of lowered that concentration over time. But yeah, I think Vici's eventually they're going to get recognized by the market, and they'll be consistently trading like at 36, 37, 38 up there.
Yeah.
Slow compounder. Well, yeah, we'll do the last question here on the topic REITs. What's your opinion on MPW?
The medical properties?
Yeah.
Yeah. I'll tell you what. You could see the problem when it was happening, that it could happen. And you could look at that dividend. I forget what it was at the time.
29 cents a share.
And what was the yield? 9% change, 13%. It was crazy. And, and now you get to the point where now you're trying to talk yourself into it. Have they turned things around? Is it going to be better this time? I generally don't like to have conversations like that with myself, where I got to tell myself a story to get up in the morning to own the stock. That's just my thought. When there's other things out there to buy.
They've had a solid return if you got in a year ago, 49%. Timing, Matt. That's why you're right when our friend Stabula bought. So,
yeah.
When I'm taking that level of risk, I'd rather buy something like Big Bear. Honestly.
Yeah. Well said. That's about it. We are about 8:30 p.m. Obviously, you have to get out of here, Tom. So if you would like to promote anything, plug anything, obviously you have your podcast, you have your Twitter, which is linked in the description. Now is the good time to do so.
Yeah, it's Saturday night. I got to get a night on the town, man. I got to go out and shake her. But yeah, you can follow me at on Twitter. I'm Tom the Investing Tiger. I think you can look it up at Savings Captain. I think it still shows under that. And then of course, the Money Happy Hour, wherever you get your podcast, just tune in, new episode every Monday morning. And guys, of course, the big reveal, the Dogs of the Money Happy Hour podcast. These are 11 stocks that you don't want to own. Confession, I own 2 of the 11.
Oh.
Wonder how many Ryan owns.
Sorry.
Target was so bad
All right.
it couldn't even be in there.
At least it's not Walgreens. Thank you very much, Tom, for coming on. We hope you enjoy your Saturday night, 8:30 p.m. Eastern. Thank you once again, everybody. Check him out at the Saving Captain. Thank you, Tom.
Guys, thanks a lot. Bye.
See
you later.
What an absolute treat. All right, everybody. You guys know what time it is. It's almost after hours. We got like half an hour till after hours, but it's the pre-after hours, you could say. The fun part of the show. Once again, though, if you want to check out any of his stuff, it will be linked in the description box. Yeah, Fiscal, we thought you were dead for a second. I was a little scared.
Yeah, no, I know I'm old, but no, I'm not dead just yet.
We still have money to make off Cash Flow Kings.
That's right.
Should we do some viewer call-ins? We haven't done some in a while.
Open it up, man.
Anybody wants to? Now is your time for viewer call-ins. Retire on dividends. You're welcome in, so you can talk some Khmer. On the topic of Khmer, did you hear the talk about a margin call?
What again?
Again, supposedly when Tesla went down this week, margin call.
Man, you would think that he would take his W from being in MSTY and
there were some great Khmer clips, by the way.
Reduce his risk, but when you Forrest Gump your way into a W, you just double down when you're because he's mistaken his luck for thinking that he's actually good.
Oh, dude, it's the greatest part is there's this guy Henry in the Discord, and he'll post these clips. He somehow gets them, and he posts these just great clips of Khmer, and it's like it's some of the craziest stuff I've heard. He's like making these high school references now, where it's like you look at Tesla, and Tesla was like the really hot, popular girl in high school. And now you have Misty, and Misty just blow her out of the water. She walk in the room, all the boys turn their head, look at her. It's just like the greatest things ever. Like it's like he's seen. Have you ever seen the movie Fast Times at Ridgemont High?
No.
Classic movie. It's like he's seen that once. It's like the OG like high school kind of drama movie in the 80s. It's a great movie.
Okay.
I love how another thing I think is completely underappreciated is how Retire on Dividends, or now Peace, Love, and Animal Crackers, refers to us as CFKs. I love that. I think that's the funniest thing. Like, just like some of the comments I've seen, he's like, "You're one of the best CFKs guest ever." It's just the funniest thing ever. It brings a smile to my face. We do have to dance for Cabo and Seymour Duck as well. 2 new channel members. So. We of course, as per usual, guys, any super chats, donations, whatever, we are obligated to do some good dance moves for you, and we will do that right now. I really enjoyed that.
It's a good time.
It is. Why not? We'll look at my portfolio while waiting for anybody to get in here. I'll provide some steady updates. Once again, Finchat link in description. This week I've continued the selling of Starbucks. I've been trimming at like a 35% gain. Is that approved?
Starbucks at 35% gains, you said?
Yeah.
Yeah, I mean that's approved. You absolutely.
I'm putting most of it in high tide, by the way.
That's what I like to hear.
Okay. Yeah, most of it in high tide. We sold out of McDonald's fully a few weeks ago. Got it like
that's gonna upset Dan.
Yeah, I know, but pretty nice return on that. He knows about it. Target is likely gonna go soon. And yeah, I'm at a minus 15% return right now on it. So like,
yeah, just dump the losers, put it into high tide, and forget about them.
The thing is, if high tide went on a dip, I'd totally do it. I'm just hesitant because like the market just seems like clownish right now. That's like my one thing, but that's like such a
I would just do it, move on, not worry
statement.
about it.
Yeah.
Get rid of the stuff that you don't really want and put it in the stuff that you do really want, you know.
Yeah. Union Pacific's probably going to be going soon as well. Sitting at a modest return on that. And joining us now is none other than reoccurring guest Seymour Duck, who we almost had a bit of a flashback today. Welcome in, Seymour Duck.
Hello.
Always fun having you on after hours. Always a pleasurable time.
Thank you.
After hours.
Yeah, at least Dan acknowledges that. I'm waiting for Fuha to come on the show sometime. I'm waiting for the KKR and PE. Convincing, I guess. Disney's actually getting a little bigger. Uba.
I do feel like this is an older comment, but
I did. I was gonna say, what'd you do for Valentine's Day yesterday?
I got a visit from a lady friend, and
that's where we thought you were. Wait, I was coming up with I was doing 8 p.m. Eastern. I'm like, maybe he had a lady friend over a little earlier than anticipated, and then
not
finish
today. Not today.
Not today. That's
could have happened, but it didn't happen. So
we respect it. What does PP have to say? I thought the market would have been more volatile when the inflation report came in high, but literally nothing. Yeah, it's. I love these comments from retired, dude. I can't. You boys spank, dude. Whoever said spanking the monkey thing high tide. So retire said it first. Spanking my mom. It's the funniest thing I've heard in a while. Yeah, chat's going off. Yeah, Hans, I love your comments too on our videos as well. We appreciate that.
We're spanking the monkey, thinking it's an investment, huh?
Yeah.
So, what stocks did you guys buy this week?
Let me look.
I bought one, and you know what it is.
Yeah.
So, I haven't really done much new in the quote value portfolio, which I've still got my Evolution. I've got my TSSI, my Uber. I think those are the only. Well, and I've added to High Tide, so that's all I've really done so far in 2025. In there, I have been advising my dad to get into Google, so that's happening on kind of on the side, but that's just because that with that dip it's had lately, I think it's a pretty good entry still. Maybe Google at 185 might be a little bit more attractive than Amazon at like 225, 230, you know?
My portfolio, I made a around $400 deposit from just money I had in my checking account. YouTube paid out like a $200 bonus in December. So thank you, YouTube. I don't know why they did it. But I put some. That's what we call the dividend dude. The dividend dude wire. Just a mysterious $500 deposit out of nowhere. For those who know. Oh boy, another great. We'll get to that. I'm talking about the portfolio right now. I love money, but no. So this week I think I bought a ton of High Tide. All right, we'll take a look. Today's the 15th, so yeah. I bought on the 10th 75 shares of High Tide, 20 more shares of High Tide, 285, 275, and 261. I bought around like 115, 120 shares this week just because I was rewatching our High Tide Roundtable a ton. And every time I do that, my conviction and FOMO gets just higher. And I indexed a little bit, and I bought more SGov. So I mean, the cash position is pretty high right now.
Oh, speaking of High Tide, the $2.50 strike cash secured puts, you can get them filled. Well, at least as of Friday, you could get them filled for 20 cents per contract. That's a very juicy cash premium there if you're bullish on the stock.
Once again, thank you to Retire on Dividends for the $2 donation. And as per usual, we have to dance to it. So let's do it. 3, 2, 1. You got the John Cena there. You are not too big to think you're something degenerate. No, we will. I love you, Retire. Retire says some crazy shit, but I love him deep down inside. Yeah, you bought more Evolution this week, I'd assume.
Yes.
Where 72,
especially on the news of Kenneth Dart.
Oh yeah, that's something we did not address that. Kenneth Dart, who owns BTI, which also was down. We could talk about that. He's started a pretty sizable position in Evolution this week.
Is that why it went up a little bit?
Yeah.
Oh, okay.
That and they started their buybacks.
Oh yeah.
Nice. All right. Well, then that's going to be just a nice quality compounder in my portfolio. Then
that dividend's going to hit in May, right? May they pay out?
Yes. They didn't. Well, technically, they didn't announce the date, but yeah, it's usually May.
Oh, that's going to hit so nicely, Fiscal. It's going to be weird getting like a $50 dividend, just like once. It's kind of like the Disney. Like it's not going to really comprehend.
Yeah. I'm gonna get a nice little. It's gonna be more than $50, but
yeah, same here.
Let me check what that is gonna be.
That's dividend hasn't even hit yet, so I mean, you could like theoretically, if you wanted to load up more. I'm happy where I'm at. I average down.
I'm getting around over.
Yeah, for me, it's gonna be like $237. Not too bad.
Yeah, for me, I think it's just like over $2,000.
Oh, okay. So you got the.
Well, it's 60% of my portfolio.
But
it's a yearly thing, though. So when it seems a lot, it's because it's yearly, not quarterly.
I know.
Yeah,
it's nice though. Like it's weird.
Then just reinvest it back into the company.
Yeah. You never know. Maybe before then, I maybe some up from something, and I get another 100. You never know.
Yeah. BTI will cover that as well. BTI was down like 8% this week. I'm still like 11% up, which is kind of wild. But
oh yeah, I'm still about I think 12ish something percent up in BTI.
So are you only averaging if it gets back to your cost per share, or would you be opposed to buying more here? If you have
I mean, I think BTI is still okay here, but at like 35 and below, it's like excellent.
Okay.
Yeah.
I'll keep that in mind. I like where my BTI is at. Does BTI pay this month?
They pay as far as I know twice a year. I don't know the exact dates.
I will check that right now.
Yeah. But
a lot of dividend talk. This is kind of weird.
Yeah, well, hey,
going back to the roots. They pay in May. They pay in May too. So yeah.
All right.
Yeah, Fiscal. Whoa, I just read that comment. Whoa. I don't know. I could personally attest that's fake news.
Yeah, I mean, I could send you videos that prove otherwise if you want, but probably better that we don't do that. It is after hours, so I have to offer.
Yeah, probably not. What are the odds High Tide pays a dividend in the next 5 years? Can we do like a percentage here?
I would say less than 10%.
Yeah, I'd say like 12%. Odd number, but 12.
I just don't see them being done with their growth stage in under 5 years. And if they're still able to allocate money intelligently towards growth, I'd rather them do that than distribute it.
So how much High Tide do you own right now again, Fiscal? You're like, I know you're 10%, but like how much?
It's 5,000 shares.
5,000. Okay, we'll do the math here. 5,000. It's around 10 grand. I'm gonna guess, but
it's current market value is 13.2.
Okay, 13.2. So you could be getting some nice. When like if everything goes as it's supposed to, what are you gonna do with the gains when we get to $15?
When we get to $15, I don't know. If it's still fairly valued, I'll just keep holding.
What if it gets to Palantir levels of?
If it gets to Palantir levels, at the very least, I'll be selling a lot of covered calls at the very least if it gets to Palantir levels.
Well said.
Sometimes when I buy a stock that I'm heavy in, if it goes up a lot, I will sell the initial capital so that and then everything else is free shares.
I sell the gains.
Yeah.
MV Cunna, I think, also sold. He sold some of his hymns. He sold his gains, I believe. He got a lot though, and he's heavily allocated. I'm looking like a 410 Fiscal. Looks like he lives in a cave. Plus, he's an MHA fan, so I guess Fuhad, you got to come on the show. You're no playboy yourself, Fuhad. I've seen you before. Joking. Very good looking. No diddy.
Speaking of playboy, that is one stock I'm looking at.
No.
To swing trade, no, just trading, not to invest.
I was gonna say heavily pirated content there.
Yeah, no. They got a big investment from another company, a corn company, right? And
corn.
Yes. And yeah. You might know their website, but yeah, they're just a penny stock that I was thinking about just swing trading.
Corn Dub?
Oh no, not them.
Oh.
They're competitors.
Okay. Would you guys ever buy corn cob if it was publicly traded?
It depends on. I guess it depends on the valuation and how much money they bring in.
Moral investing here.
It's not as though I have any kind of moral objection. And even if I did,
we're cold, calculated, and emotionless on the cash.
I don't make any moral considerations when I invest money. So
I just thought of this. The AI is going to be running through that. We have our editor uses a software to like naturally kind of go through our videos and stuff, cut it out. There's going to be one titled like, "Is corn a worthwhile commodity investment in 2025?" And we're going to go through titling and stuff. People are.
It's true. It will probably do that.
I think last year it was Corn Hub, like April Fools, like it was just full page of corn.
Oh yeah, bullish.
But that here's something you don't know. That was my ex-employer before I moved into a big big fintech company. Yeah.
Corn Dub?
Yeah, I live in they're a French Canadian company.
So
nice.
So have I seen you before? Is that my question?
No,
I don't reason you're faceless.
No, I don't do the videos.
Oh, okay.
No, I was more in the back end with the website.
Anybody you see in the videos is actually a contractor. Technically, they're just similar to how you get a 1099 from Google.
What an interesting. That's a lot.
Yeah, and then they got bought out by another company because they had bad publicity, and Bill Ackman was trying to take him down. Visa and MasterCard was canceling their.
Was it something MindGeek or something?
Yeah, MindGeek.
Yeah.
So you worked in the industry?
Yes. Crazy parties, though.
Let's hear some stories. I want to hear some stories if we can.
Did you ever meet any of the talent, the adult actresses? We'll say
Yes, they're at the parties. Yes.
Okay. All right, so
We should be invited to
I
this.
need to send over a resume. Time for a career change.
I hope your dad is still watching this. That's interesting. So, like behind the scenes, is there any stories as I meant, any good stories you think you could tell? We're deep in the show. We can get away with stuff.
Not really. I don't want to really say anything about it. Just
He
in
signed
case.
an
After hours,
Just
everybody. After
he
hours.
signed an NDA.
Yeah.
The only bad part is that I was in charge of the ads. So if you look at any of the ads on the website, all right, I would have to look at them every day and approve them, and they were so bad,
Dude. Yeah,
You
that's
get
true.
but they're cheap though. So if you want to advertise on there, I will say this: if you wanted to advertise, they're cheaper than anything else. You can get like pennies to advertise your business there, and
I've never seen a legit business on a site, dude. I see.
No, there is. There's legitimate businesses, and they make a lot of money.
I see local mills near me that want to.
I see businesses coming in spending millions of dollars, and I'm looking at their ads and proving it, just making sure they follow the guidelines that Google approves, and then if Google doesn't approve, the other browsers approve.
Interesting.
So, like, you would approve the local mills near you ad.
Yeah, but those aren't allowed anymore because they're trying to be
I still see 'em.
They're not on that website. They're not
Okay,
trying. Yeah. Maybe they're competitors.
Mm.
They don't really care anymore because they keep getting sued, and now they have all these strict guidelines, and they're trying to be more legitimate. And the new owners are trying to be trying to be more legitimate as well.
Yeah.
And there's been rumors they're going to go public one day, so they want to take all of this negativity out.
So, what kind of businesses would you typically see advertised? No, you don't have to name any names, but just what
casinos,
industry?
like big casinos. Yeah.
Oh,
you'll see stake.com on there all the time.
I'll do some due diligence later. Joking. Yeah. Okay. Well,
and you see a lot of pet shops where they sell dog collars as well.
Are we talking Toys R Us or
they're legitimate businesses
okay,
for pets, but they there's that niche audience.
Yeah, this is probably one of the most interesting talks we've ever had on the After Hours.
Oh, and pills, lots of pills.
Oh yeah, Rhino pills, good fun. The gas station.
Male enhancement.
Is there any chance I could hear a story after we end the show?
Possibly.
Okay, it could happen. Wow, this is going to be a fun video to make a thumbnail for tomorrow. I'm looking forward to
that. Yeah, it's going to be good.
Any I'll give you guys the 2-minute warning in chat if anybody has any comments, questions, concerns regarding any of our holdings or market conditions, whatever your little heart desires. Fiscal, that's the third time I've heard police or fire sirens out your house. Are you okay?
Well, I live a few blocks from like a firehouse. So if there's any medical emergencies within like a mile of here, then they get dispatched out of there and you hear the sirens.
The Oracle sent himself.
Okay, I'll give you one story.
One
story. So it was a Halloween party, right? And apparently this person was a famous corn star, right? And it's one of those people where you can't tell if she was packing or not. And she was flirting with me and I didn't realize it. And she was in leather. She was supposed to be Catwoman, all in leather, and I didn't realize who. Yeah.
That
happened.
So you fumbled the bag? Actually, you'd probably be dead.
No, it was a good thing I fumbled the bag. Yeah.
Yeah, you'd be. Poor guy would be.
He'd be catching, not pitching. He will neither confirm nor deny.
Yeah. Members only. Actually, you are a member. It's been a while since the Khmer jokes. There's nothing really to joke about. Like, we had another margin call this week. Yippee-ki-yay. What I'm telling you, once there's like an actual market downturn, it's fair game again. We'll just say.
Mm-hmm,
And by the way, the Oracle does not like Khmer. I think we've kind of started an alliance now with the Oracle. He does not like Khmer.
the enemy of my enemy.
I know.
This is some Sun Tzu shit.
All right, everybody. We are 1 hour, 28 minutes in. We appreciate all the activity in the chat. Once again, thank you to Cabo for becoming a channel member. The gifted membership from Seymour Duck, who Alan got, who likes to make things weird. And we tire on dividends. It's always interesting seeing you in the chat. But yeah, thanks for the explanation, we tire. We appreciate that.
We couldn't put that one together. Yeah.
Thank you all for watching. Smash the like button, subscribe, do dividend stocks on drugs. We'll see you next week. And of course, cash flow is king.